Welcome back to Alberta Primetime, and the vocal point now. Billions of dollars, thousands of jobs are on the line. The federal government is ordering striking Canadian Pacific Rail employees back to work. What's at stake in particular for Alberta? Our Monday Money panel is in tonight. Jane Alm is an investment advisor with Angus Watt Advisory and National Bank Financial. Todd Hirsch is senior economist with ATB Financial. And Shafiq Hirani, a director with Investors Group Calgary. Welcome all of you to Alberta Primetime. Good evening.
Thank you.
Good evening.
Jane, when Albertans think of rail, we think of grain cars, we think of oil tankers. Remind us, though, give us a sense of the billions of dollars, the many, many jobs, the companies that are at stake.
Well, the number that we saw was $540 million at risk per week if CP's strike lasted for a long period of time. The strike action itself was relatively short, so a lot of companies were offloading from inventories. So when companies move, let's use grain or coal or oil, they move it into an inventory storage. Those storages are used to offload onto tankers or whatever barges to go
just holding it.
That's right. So the companies that are taking the transport from the trains have just been drawing from inventories. So we haven't seen an impact on the economy to date. If that strike were to go on until those inventories were depleted, that's where your $540 million a week starts to kick in.
Todd, Alberta does not have enough pipeline capacity as it is. We've seen companies in the last couple of months start resorting to rail to try to move their product, export it out of Alberta. What does this kind of is it a scare for them? I can only imagine. What does it do to this option now?
Well, it does put that plan B, shipping it by rail tanker to the ports. It puts that plan B at jeopardy. Now, there's still a CN, which would carry probably more of it to the West Coast port of Prince Rupert anyway. But both railways are important, and you would have to expect that energy companies that are now looking at increasing shipping by rail. This strike is very troubling, because it does set a precedent. Could there be further strikes in the future? Mm-hmm. Might there be other disruptions? And it takes away some of the appeal, I guess, of that Plan B shipping route.
Shafiq, despite today's back-to-work legislation by the federal government, the performance of Alberta companies and the performance for their investors, are we nearly to that point at all where that's in question? How long would it take? How much more trouble would it need before we see that being affected?
Yeah, well, this back-to-work legislation by Lisa Raitt, the Labour Minister, it does affect the Alberta companies, but more so in a tertiary fashion. So CP, if 4,500 people go back to work, the problem is the amount of people whose jobs are dependent on that, they now have nothing to do. So these people have to get back to work, or CP has got to lay off people. But it's the tertiary companies like Teck that rely on these people, that they have contracts and they have to now get these people back to work. So the impact is pretty monumental if it is a long-term, long-winded strike.
We talked a little bit about oil in particular. What about grain, the ag sector, farmers?
Well, the ag sector this time of year is probably more impacted on the fertilizer producers, the agriums, the potash, because they're trying to move their product to where the farmers need it. It'll affect the farmers if they can't get those products to get onto their field. And if the strike were to last through harvest, then obviously it affects that as well. Mm-hmm. One of the fundamental problems that we're seeing with CP comes back to how many people work at CP, 16,200. How many retirees do they have? 18,000. So by just our demographics of this country, many companies are going through this. They're starting to have more people retired than employed, so it's very hard to meet those pension benefits. So that all needs to be addressed.
More battles with labor.
More battles with labor ahead. And as we saw with Air Canada, just because they're ordered back to work doesn't mean that there's not some other action taken.
On the other front, transportation, we're a resource-based economy in Alberta, despite the population demographics. But a decade ago, Alberta's Ministry of Transport said, let's look at what we've got: container shipping, rail, truck. air, the intermodal connections. Todd, where is the province at right now in terms of being able to get our goods out to the global market?
Well, we've made tremendous strides over the last 10 years in terms of the infrastructure, but we've got a long way to go. And I think this whole strike really underscores the importance of well-maintained and well-operating infrastructure. Rail is one piece of that. The highway system is a piece of that. Air transportation, the expansions we're seeing at both Calgary and Edmonton airports. Calgary developing into quite a hub for intermodal and warehouse. All of this is part of a well-functioning economy, but it often, it kind of gets lost in the cracks sometimes. It's not very glamorous for politicians to announce.
Until we need it.
Until we need it, until it's not there, and then we're like, what's happened? It's not quite the same. It doesn't have the same emotional appeal as education and healthcare spending, but infrastructure spending to the economy is absolutely critical.
Another really interesting thing about today, Shafiq, was the federal government just repeatedly, first Air Canada, now CP Rail, it's just sending this message to the world and to the markets. We are open for business. We will support business over labor, and we are going to make sure this country, including provinces like Alberta, are open and ready to sell.
Yeah, the federal government's in a tough position, and they really stepped forward, and they really did it very quickly. On one hand, they have to defend CP's right to negotiate with the Teamsters, and the main breakdown in the negotiation pertains to the pension. CPP has a little bit of a underfunded liability in the pension. CP wants to ensure the pension plan is going forward for all the retirees.
Right.
The government says, well, listen, our pension plan, our due diligence is not just to CP, it's to the rest of the Canada
The entire
and our
economy.
economic interests.
Right.
Yes.
And they will
that's
not
why
let
they
that
take forward.
recovery slide at any cost, it appears so far. Next up, another big issue for Alberta, the price of oil. It's been slipping. How low can it go? The Monday Money panel is back in a moment here on Alberta Primetime. Welcome back to Alberta Primetime and the Monday Money panel. We've covered rail. What else are our experts watching for this week? We're going to touch on the price of oil in a moment, but first, Jane, you're keeping an eye on U.S. housing numbers. Why?
Well, because they seem to have stabilized. We actually had housing starts came in at a reasonable number for the last month. Existing home sales actually were higher than expected. So where we had seen this steady decline of U.S. home sales, we're actually starting to see some stabilization. Don't know that I would say that we're seeing a dramatic upswing yet, but affordability is at a 20-year high. People who have jobs are starting to buy homes, and they're looking at low interest rates, prices down significantly from a few years ago.
And for us in Alberta, this means stability with our biggest customer to the south?
It does, and a lot of Canadians are actually buying houses, specifically in Phoenix. We're one of the reasons that those numbers are doing a bit better.
Shafiq, what other numbers are we expecting out of the U.S. this week that you're looking for?
Yeah, the University of Michigan's consumer sentiment numbers are out, and these are really interesting because consumer sentiment is up, but these are what's called a contrarian indicator. So as the markets go up, consumer confidence goes up, the markets tend to be contrarian. So a good reading means the markets are going to do bad. A bad reading means the markets generally do good. And
you're looking for some Canadian growth figures as well?
GDP numbers are out on Friday, and that's an important number because the Canadian government has refined its GDP numbers around 2%, so we're looking for a 0.6% first quarter GDP number on Friday.
Todd, the shaky financial future of Europe still affecting economies this week, including Alberta's oil-based economy. Any signs of stability there yet?
Not a single sign of stability. In fact, well, a lot hangs in the balance with what happens in the Greek election, the second round election coming up this weekend. And it's not that Greece is it's a very tiny economy, but Greece is not the only country in Europe that's in trouble. It's also Spain and also Italy and others.
Too much
And
debt.
Greece could be the first domino that tips, depending on how this election goes. If Greece does not accept the austerity package, they will either be forced out of the euro or they will default, or both. And both of those scenarios, it's a very troubling sign for the future of the European Union and the euro as a currency.
There are banks that are exposed to that debt. They start shrinking up what they're willing to lend throughout the world.
Yeah.
and we have a
if
recession.
investors lose confidence in the solvency of those European banks, then we're into another global credit crisis where everyone stops lending to everybody else.
And that's why we care all the way
And
here in
that's why
Alberta.
we care, because that'll affect us here.
The price of oil has been dropping since the beginning of May. Europe's instability and the fears there, one of the reasons. But there are lots. In fact, you equate the price game with oil to a board game, snakes and ladders.
Yeah.
Tell us why.
Well, snakes and ladders, everyone knows the game. It's entirely a game of luck. You roll the dice, there's no strategy. In Alberta, we are a price taker, so we can't control all of those factors. And there are some ladders, notably the turmoil in the Middle East, that could, over time, push prices higher. But there are also snakes in the grass, and it's always the snakes that surprise Albertans. Right now, the situation in Europe, also supply coming on, different parts of the world, they're finding oil supply deposits. Those things are, at the moment, the snakes are a little bit stronger, pushing prices a little bit lower.
You're nodding your head when Todd was talking about supply.
Well, and supply is not only what's coming out of the ground, but again, it comes back to that transportation. How do we move it? We move a lot of oil through pipelines. The pipelines are very, very full. So if you're an oil producer in Alberta, you're not getting the WTI price that you might see on your evening news. That oil producer might be getting $16, $18, $30 less than that, because that pipeline is so full with the oil and the natural gas coming out of the production of the U.S. that there's not a lot of room for Canadians coming through.
Can't sell it.
Which is why we need Keystone.
And Northern Gateway.
And Northern Gateway, both, exactly.
Shafiq, if oil prices are on a slide right now down a snake at the moment, when will they reach a ladder again? Is that even possible to predict right now?
You know, it is a tough prediction, and you know, Jane brought up some important things. It's not just about the pipelines, but also the technology and the new oil that's being built. That we're at all-time highs at inventory levels. So projecting when they're going to go up is a really tough one when everything points towards lower prices. The one thing we have to understand is, as Albertans, this affects our budget. And Alberta makes $40 billion, and we spend $41 billion. We're sitting at a $1 billion deficit. So the impact of a $1 lower price of oil affects us by $200 million.
And Todd, it's not just the province, it's government, but also big oil sands company. They've all been banking on $100 a barrel oil. How long before they're all in trouble?
Well, they have a little bit of time. I mean, they're not going to react to the last 2 or 3 weeks of softer oil prices, but they guaranteed they are watching this very, very closely. And if it does appear that we are on a cyclical oil slide, and in 2008, it slid all the way down to $33 a barrel.
Yeah.
You know, that is a different environment for them. Even if it hits $50 or $60 a barrel, plus the discount we take here in Alberta, and if it looks like it might stay there for a while, we could start to see some announcements of projects being postponed.
And that's the tough part, isn't it? Because right now we're talking about Highway 63 and the need to twin that, spend that money, get that done. But those are the things that get impacted right away.
Not only the Highway 63, but when you talk about slowing down or not developing, that means you've got electricians, construction workers, steel workers. It comes back to that dribble down effect. So it's not just the oil sands workers. It's everybody that goes into building everything that they need. Might be rental properties for houses, for apartments. So you get, and then that's grocery stores, retail stores, gas stations, everything just affects everything else. So we would really like to see, first off, in Alberta, we come back and we always need to diversify our economy because we're so energy based. That's one part, but we can't do that overnight. That takes time.
Thank you all for your time tonight.
Thank you.
Jane Alm is an investment advisor with Angus Watt Advisory and National Bank Financial. Todd Hirsch, senior economist with ATB Financial. And Shafiq Hirani, a director at Investors Group Calgary.